The resources sector has already boosted the office market, and we've already seen a significant improvement in that market. We've seen vacancy fall from over 10% down to 6% over the last 18 months. These benefits haven't flowed through to the other sectors. Industrial, retail, and certainly residential are still lagging behind. So we've been looking more recently at when this does flow through to the other sectors, and we've been trying to quantify the impact that the resources sector could have on these other sectors. We've taken some estimates from the Queensland Resources Council of how big the investment pipeline is and how many jobs flow off the back of that investment pipeline in the resources sector. We've translated that into office demand, so we've essentially taken the white-collar growth out of those employment forecasts and estimated that over the next 10 years it should add around 30 to 65,000 square metres of additional space requirement to the Brisbane CBD and fringe office markets over the next 10 years. Our estimates in terms of retail is that we'll need in the order of 2.5 to 5 Westfield Chermsides across Queensland over the next 10 years. In the industrial space, the comparison that we've made is that we'll need between 6 and 13 Metroplex on Westgate estates, or to put that into in other terms, 80 to 160 average industrial buildings. The housing sector is certainly very quiet still at present, and there's a lot being said about how depressed housing market is. But ultimately, if we get the kind of population growth that we are anticipating through this resources boom, and as it starts flowing through the rest of the economy, I think it's inevitable that we will need higher levels of construction. I think it is just starting to happen at the moment. We are seeing, starting to see slightly higher levels of construction. It's very early days, and it's a bit soon to perhaps call a turning point. But really, a lot of people focus on prices, and prices are still going backwards. But from the construction level, I think things are starting to just turn around, and I think within the next 3 years we'll start to see housing really accelerate and start to catch up to the office market and some of the other sectors. So over that entire period, what that translates to is at the low side about 80% of the size of Townsville, or at the high side about 1.8 times Townsville. So certainly big numbers. Yeah, well, that's a hard one to actually anticipate because of the nature of a lot of this employment. A lot of the employment will stay fly in, fly out. That means that the economic benefit really flows out of the regions where the projects are. So certainly a lot of the small towns that we're hearing about will have enormous benefit from the resources sector, but with a lot of staff working 5 days on, 3 days off, or 7 days on, 7 days off, essentially they're going out there to work, and then they come back and spend their what they've earned back where they're living. And so South East Queensland will be one of the key beneficiaries of this strength. There also will be some obvious other areas that will go through construction booms. A lot of the activity, particularly the coal seam gas, is centred around Gladstone. So Gladstone is undergoing a mining boom.